Hey, this is Justin with DayTradeTheMarkets.com on Wednesday, November 14th, 2012. And today, obviously, I've got a chart here with no indicators on it, just price action. And clearly, we had a pretty good sell-off on the day. And I thought what I would do is start with just a naked chart and then build a chart with each of the pieces of the software and show how each of those pieces can give you a little bit more information that can help you make better decisions throughout the trading day, because obviously if you can become a better decision maker with your trading, you're going to get better results. So what I want to do before that is just kind of talk about the various building blocks that we look at. And we want to kind of come from a bigger picture perspective, or what we call the intraday bias. And so we start each day with a bigger picture bias and also some bigger picture support resistance levels. And then once that starts, we want to see if the intraday, or real-time evidence that the software creates, whether it be the relative aggression bars, which are telling you which side in real time is more dominant within the market, buyers or sellers, whether it's the real-time support resistance zones, whether it's the filter, path of least resistance filter, whether it's the deceleration bars. Each of those real-time pieces of evidence are also giving us pieces of the puzzle that we can see if they confirm our bigger picture bias or if they're telling us a different story. And when you put that all together, the idea is that the more pieces of evidence that are coming together, the more clues, the more puzzle pieces that come together, the better sense you can make of the market. And if you can make better sense of the market, obviously you can stay on the right side of the market, you can make better decisions, and so forth. So kind of a simple concept, but what I'd like to do now is just kind of show each of these pieces and how we would make sense of those. So we'll start from the perspective of, again, the bigger picture bias. And there's a couple ways that we do that. The first is that we do a report each night that gives us kind of our daily homework, or what we're looking to look for ahead of the session. So last night we did this report, and basically it's saying that our bigger picture bias is down unless we got above 1415. That bias is going to stay down. So that's, all things equal, we would rather be on the short side heading into the day. And that we want to look at the 1384 and 88 as potential resistance, and then look at the 1363 and 42 as potential supports or targets in the down auction. Okay. Now another way to look at the bigger picture auction is with our new version of the software, which is coming out very, very shortly. We have multiple time frame analysis available, so we can start by looking at the 60-minute chart, which is kind of a swing trading chart, and you can see that right now it's it's mid-November. On the chart that I'm showing here, it's going back to mid-July, and I've even got it going back a year. And you can see that starting in early August, we were basically in a pretty good up auction. Things started to turn over. We had a bit of a rally, and then things turned over right around a couple days before Election Day last week. And if I zoom in a little bit on this chart, you can see that a few days ago, or a week ago, 8 days ago or so, the filter turned over to dark red. Our support zone turned over to red as well. We tested up into that. We've been from around the 1400 area. We've been selling off. It's 50 points or so now. We hit 1350 today, so 50-point sell-off from there. Point being, you can use this as a swing trading type of an idea, or you can just use this as bigger picture analysis. In other words, it's confirming, on the bigger picture chart that we're leaning toward the downside. Here's another look, for example, on let's look at a 15-minute chart. And again, this is what happened today. Obviously, heading into today on this 15-minute chart, we wouldn't have seen that. Okay, so but heading into the day, as the last bar yesterday, we turned over into a filter. So again, confirming on the 15-minute as well that we're looking for the downside auction if possible. Okay, so hopefully that makes sense in terms of the bigger picture pieces of the puzzle here and here. Now what I want to do is look at a chart, and normally you would have this all on your chart at the same time, but just look at each of these pieces individually and add them on top of each other, because that's going to make it a little easier to see what's going on. Okay, so if we go back to our 1-minute chart here, we've got nothing on it. Let me go to the indicators and go to the software and and load the indicators. So what I'm going to do is first put on what we call high velocity moves, and also put on our aggression paint bars. Within our aggression paint bars, we have we have what we call level 1, level 2, and level 3, both positive and negative. And that's basically saying positive level 1 in light green is moderate buying aggression. In other words, in that time frame, in that bar, the buyers were moderately more in control than sellers, or more aggressive, what we call that. And if you want some more detail on what we mean by aggression, I can send you a video on that. The level 2 would, in this case, would be green, showing that strong buying aggression, and then level 3, it's dark cyan, showing extreme buying aggression. And the same thing on the downside: moderate selling aggression, strong selling aggression, extreme selling aggression. Okay, so again, I'm just putting on our what we call high velocity moves and our aggression paint bars at this point. So that's all we'll see now. And I know this is a bit crunched up, but you can see at this point we just have paint bars. Black bars mean there's not even moderate buying or selling aggression. It's basically neutral. But you see some paint bars and some what we call high velocity moves. Okay, so what I can do here to make it a little simpler is just eliminate the level 1 bars. So we're just looking at the level 2 and level 3 bars. So to do that, I'll just go here to the software, and it says show all. I'm just going to show level 2 and level 3. Okay, and click OK. And at this point, we just have level 2 and level 3 bars. So let's have a look, just looking at the aggression bars, at what this is telling us. So early in the day, and again, heading into the day, we're leaning toward the downside. So we want to see if our intraday or real-time structure is supporting that, or if it's giving us counter evidence. And you can see that our first major structure was this level 3 selling aggression bar. And whenever we get a level 3 bar, or any of these bars, we want to ask ourselves, do we get follow-through or do we get rejection? And typically we define that as, in this case, it's a selling bar, so can the high of that bar hold? And you can see that it touched that to the tick. We did not get any activity above this. The high tested, it held, and then we sold off below. Same thing here. We get another structure. Does the high hold? Yes, it does. We sell off below. So at this point, it's telling us, okay, it's confirming our bigger picture bias. Sellers are clearly in control of this market at this time, and are for the first hour and a half or so of trading. It's not until we've had this nice 12 or so point move that we see our first buying structure. Okay, this high velocity move and a level 2 buying aggression bar. Now, does that mean buyers are now in control of the market? No, it doesn't, but it's just telling us that this wave of selling is over, and now it's, buyers are the last, the buyers have put in a bit of a push, and now let's wait and see what happens. And you can see that the market stopped selling off. We basically consolidated here for several hours, and this is where President Obama started speaking in here. And then it wasn't until this structure here, this level 2 selling aggression bar on the low of the day, occurred. And then we had this attempt. We had attempted to test the high of this. We attempted on, and I remember thinking at the time, this is a very key bar, this green level 2 bar. Are we going to get follow through from this level 2 bar, or are we going to get rejection? If we get rejection, which is what ended up happening, we tested above that bar, but we didn't get a full bar above. We got rejection, and that it was kind of off to the races in terms of selling. You can see that all of our selling structure had follow through. The buying structure, we had a little bit of a bump there, but then we continued on with more selling structure, and then here at the end we had a level 3 buying bar, kind of signifying the end of the cash session and the end of this move down. So that's what the first piece of the puzzle, which would be the relative aggression bars and high velocity moves, are telling us. Okay, so now let's add another piece, which would be our directional filter. This is just another tool, another piece of evidence that you can use, another puzzle piece, if you will, that you can use to help make sense of what's going on. Okay, so we'll go to indicators. Let's go to the filter, and let's just enable it. Click true. And you can see at this point that our filter was dark red relatively early on, telling us that the order flow is telling us that the bears are basically in control of this market. We get a little bit of back and forth here. Bears take back over. It's just, again, is the filter the be-all end-all? No, it's just another piece of the puzzle. It's just helping give you more evidence. And as an aside, whether you use this software as a standalone, that's basically what I do. I use it pretty much on its own, or you can do what a lot of our clients do, and they use it as a bit of a decision aid for what they're already doing. And it's interesting, a lot of people have found it's kind of the missing piece of the puzzle that takes them from either being break even or a losing trader to being a winning trader, or going from doing well to doing even better, with the idea being, if you have a current method that you're using when you're about to take a trade, does the evidence that this kind of unique tool is giving you, does that support that decision? So in other words, if you had a short trade set up, today it certainly would have supported that. The filter is saying, yeah, go for it. The aggression bars are saying, yeah, bears are in control most of the day. Okay, or if you were looking at a long trade, you would want to think twice. So it's kind of you can use it as a decision aid, you can use it as a standalone, and so forth. A lot of different ways to use it. The important thing is this is a tool. This is a tool that again is giving you evidence. And like a detective, you take that evidence and try to mix it up in your mixing bowl and make sense of it. So I'll stop rambling here and let's add the next component, which would be our real-time support resistance zones. So I'll go to indicators and go to support resistance zones. And I'm going to put true to show the zones. Click OK. And so at this point you can see that the support resistance zones are on the chart. And what is this telling you? It's telling you that all things equal, if there's a red zone, all things equal, it's confirming any decision you might have to sell in that area. It's giving you another piece of evidence that might make some sense to be a seller near any of these red zones. And it's telling you that if you're thinking about buying, you might want to think twice. What does a green zone mean? It means all things equal. It's not a bad place to be a buyer, but you might want to think twice about being a seller. Now you have to again put that in conjunction or in context with what other evidence you have. Again, bigger picture like we looked at earlier in the video. Bigger picture's down, filter's red. You're going to want to be careful buying. Now if you get one of these, you see that's kind of a yellow zone. That's what we call a caution zone, and that's telling us that would normally be green, but it's telling us, yeah, this is a level that you want to monitor. There could be a bump there, but essentially there's a lot of weight on the market in this case, and our expectation would be that the market's going to pierce through these yellow areas. Okay, so that's what the yellow means instead of being green. Hopefully that makes sense. So again, the support resistance zones, is that the be-all end-all? Is that something you would want to just trade blindly? Of course not. It's another piece of evidence. But the more pieces of evidence that you have that come together, so in other words, resistance zone, filter, bigger picture bias is down, resistance zone, filter, bigger picture bias is down, the more of those pieces that come together, that's what we call confluence, the better your edge on the trade. And of course, it doesn't mean it's always going to work out if you have three pieces of evidence that happen to line up, but that's the idea. It's a probability game. You're trying to increase your edge. So hopefully that makes sense. Let's add another piece of the puzzle, which would be the deceleration and divergence indicators, and we'll just add those right here. Click OK. Okay, and now you can see that we have some diamonds and triangles and circles, and that's basically telling us these are points of deceleration within the market. Okay, and so that basically what that means is, for example, here we have a bar that has a higher high than its prior bar, but within that bar, the level of buying aggression has greatly decelerated. So in other words, if you have a higher high than the prior bar and your level of buying aggression were increasing, then you would expect the market to continue higher. But if you have a situation where you have a higher high, but the level of buying aggression within that bar is decelerating, you would think that the market is poised to run out of gas. And again, is this the be-all end-all? Is this something you would just want to trade blindly? Of course not. But when you have deceleration, it can be an extra confirmation, such as right here. Again, the market decelerated right here at a resistance zone in a dark red filter at the time, in a bigger picture bias of down. It's just adding a little bit of extra information. Again, you wouldn't trade those blindly, but when you can combine those with other pieces of evidence, it certainly can increase your edge. So hopefully that makes sense. Again, the idea is you take the bigger picture bias, you mix it with what's going on in real time in kind of a unique way, and you increase your edge. That's the idea. So hopefully that, the point of this video, I know it's a bit long, the point of the video is just to kind of break everything down piece by piece, so that hopefully it gives you a little bit bigger picture understanding of how all of it works and how it might be able to help you. So let us know if you have any questions about that, and we'll be happy to answer any questions that you have. Otherwise, wish you the best and good trading on Thursday. Thanks so much.